Hello students, and this is the third video for Chapter 2 for Principles of Financial Accounting. What I'm going to do today is talk about journals and ledgers. Okay, and I have a portion of a journal and one ledger up here. The journal is the book of original entry. That's where you make your entry for the very first time, and it is in chronological order, which means it is recorded in the date that it is that the transaction occurs. I have a journal up here, and these are the parts of a journal. You have the date column, the description column, the posting reference column, and the debit and credit column. And notice that the debit column is on the left and the credit column is on the right. Remember in the first video in this chapter we talked about the debit always being on the left. Okay? Now let's look at the proper format to put the transaction in a journal. You need to put in the date, and at the beginning of each page or until the date changes, you're going to put in the year, then you're going to put in the month. But you don't have to repeat the year and month, as I said, unless it changes. Okay? You've got January 1st, January 2nd, January the 4th, January the 10th. Okay. Now before you actually put a transaction into the journal, you need to analyze the transaction and figure out what's going on. The first step would be to figure out what happened. Okay? The second step would be to figure out what accounts are affected. In this case, our first entry, the two accounts that were affected were cash and capital. The third step is to determine whether the accounts are increased or decreased. And then the fourth step is to determine if those increases or decreases resulted in debits or credits based on our debit and credit rules. So here we're putting in, the owner is putting in $50,000. That's a debit to cash because it affects cash and increases cash, and we increase cash with a debit. And capital is increased, and we increase capital with a credit. So our entry is a debit to cash and a credit to capital, and you will always have at least one debit and one credit in every transaction. You also put the debit first and then indent a little bit and put the credit on the next line. And normally I would say you need to put in explanations, but I don't have enough room here, and in a lot of the problems in the textbook it does not ask or call for explanations. Also, the indentation here, a lot of your computer programs will not do that, so I'm not as strict on the indentation. However, if you do not indent the credit, make sure you skip a line, because what I want to see is a distinction between those two journal entries. And if I can't make a distinction, it's going to make my grading a whole lot harder, and it would be better in the long run if you follow the rules. Okay? Another thing I want to make sure that you don't do is put the credit first and the debit second, and then even if you have it in the right column, it's still not correct, and I will count off for it because it makes grading an absolute nightmare. So please do it in the proper format. Each of these are in the proper format: debit first, credit second, indented. Okay, I have 4 journal entries here: a debit to cash, a debit to rent, credit to cash, debit to equipment, credit to accounts payable, debit to supplies, and a credit cash. Okay, the amounts may be different, but these are some of the things we did in Chapter 1. Alright, now let's talk a little bit about posting. I have a ledger over here. This is the type of ledger that is used in the textbook. It's not a T account, it's a different type. You have the date, you have an item column, you have a posting reference column, you have a transaction column, debit and credit column. The middle debit and credit column is for your transaction, and you'll either have a debit or a credit, not both. Then you have a balanced debit and credit column, and normally you're only going to have a balance on in one of those columns. Since we increase cash, which this is the cash ledger, with a debit, our balance is always going to be a debit balance unless we overdraw our account at the bank, and then it'll be a credit. You don't want a credit balance in cash, okay? So you don't have a balance every time. But you do have a balance every time, but you don't have a balance in the 2 columns every time. Just one of the 2 columns. All right. Now I have journalized these entries I have put them in the journal, and now what I'm going to do is show you the posting references, because they are important as a cross-referencing. Even if you're using a computer system, there is a system within most computer accounting systems that will cross-reference or refer back to where the entry came from. And that's what you're doing with posting references. You're showing in the ledger where the entry came from, and in the journal you're showing where the entry went to. So it is important so that when you're going back months later, or the auditors come in and they're looking at your records, that it's easy to follow where the entry came from and where it was posted. I only posted the journal entries that affected cash, because that's the only account I have up here. So let's look at them. Once you have journalized your transactions, then the next step is posting, which is transferring the information from the journal to the ledger. And you'll do it line by line. I actually would post both sides of this entry. I would post the other side of the entry to the capital account, which I don't have up here, but let's look at cash. I'm going to take cash. I have a debit of $50,000. Okay, over here I put my date the same way I put it in the journal. Then I'm going to put in the $50,000 transaction, bring the balance forward. We didn't have anything to start with, so the new balance is $50,000 debit. Okay? Now when I do that, I want to know where this entry came from. So the posting reference in the ledger would be the page number in the journal. And when we get into special journals later on, we'll put in a reference for the type of journal. But right now we only have one journal. Okay? So my posting reference over here is 1, because this is page 1 in the journal. Then I bring my posting reference back over here to show where the transaction was posted, and it was posted to account number 100. So that's what I put in the journal. I come down here, I have a credit to cash, put in the date, put the amount in the credit transaction column. Now I'm going to subtract that credit from the debit, because we have a debit balance. A credit will decrease it, so therefore I now have $48,000 in my balance. My posting reference is 1 because this is page 1 from the journal. My posting reference here is account number 100. And when I post these others, I would also have posting references of the account numbers that I posted those to. Okay? The last entry we have that we can post is a credit to cash. So I'm going to take that $5,000 credit. That was on the 10th. My posting reference is 1, page 1. Put it in the credit transaction column. Now credit will decrease the debit, so I'm going to subtract my balance now down to $43,000. Okay? And my posting reference here is account number 100. This is just a very brief analysis of how we will post and how we will journalize. I hope this is helpful. If you have any questions at all, please feel free to send me an email. And that's the last video in Chapter 2.